Thanks so much for tuning into Talking Point. I'm your host, Neeraj Shah. Well, the conversation today is about the IPO rush in India. Some would call it a frenzy. Some would call it about time that it is happening. We thought it's best to get somebody who deals in this sphere day in, day out, to get a sense of whether this is similar to times and things witnessed in the past, or is this looking slightly different because of the nature, because of the composition, and because of the liquidity floating around. Mangesh Ghogre, Executive Director and Head of Equity Capital Markets at Nomura India, joins us right now for that. Mangesh, great having you. Thanks for joining in. I hope all is safe.
Good morning, Neeraj. All is safe. I hope same at your end. And thank you very much for having me. It's a pleasure.
The pleasure is ours, Mangesh. So how would you characterize, Mangesh, this IPO rush that we're seeing? Because would you say that it's an opportune time for companies to raise capital because the markets are at the levels that they are at? Or is it that we are actually seeing the advent of some quality companies which we haven't seen before, and it's a big opportunity for retail investors to participate in what is arguably a new set of companies coming in?
Sure. So look, let's put this in perspective. It's not that this has happened completely as a surprise. If you look at the last 5 odd years, we have had a good inflow of IPO paper. To put you hard data, in 2017, we had 33 IPOs to raise $11 odd billion. And in 2018, we had another 22 IPOs to raise $5 odd billion. Last year, which was also a banner year, considering it was a pandemic year, we had 14 IPOs, but some of them were largest ones to raise almost $7.5 billion. And this year, we have already done 24 IPOs to raise $5 odd billion. So if you look at the last 5 odd years, it's been a consistent inflow of IPO paper. If you extrapolate the activity we have seen in the first half of this year, it's very much possible that we could actually have the highest number of IPOs in India ever. I think the last, if I remember, was 33 IPOs in 2017, and we are already done with 24. So there's a good chance we may exceed that number. So that's a healthy sign for a market. The second reason, the way we characterize this market, is the performance of IPOs which have got listed. I think from an investor's perspective, we have seen that the biggest turnoff for an investor is if their bets go wrong, if they do not make money. And if you see for 2020 as well as the first half of 2021, the track record of IPOs which have got listed is pretty strong. If I remember right, from the 22, 23 odd IPOs which have happened this year, I think around 18 of them are above water as we speak, which is a good track record. Obviously, investors may want to see more, but that's what is keeping the party going. That also brings us to the risk that if some of the IPOs do not perform or at par with the investors' expectation, that could be something which is of concern for the incoming issuers as well as investors, because that's something which investors may not appreciate. I think that's the way we are characterizing this market.
Okay, yeah. So I buy your point that this is not the first time, right? We've seen multiple instances. It's just the, how do I say, it's one that it's probably happening at the peak. And again at the peaks, we actually see a lot of companies coming in, but it's also a year of firsts, right? Of sorts. We've had the first gaming company come out with an IPO. We now on the throes of having the first truly tech-enabled platform company getting listed, so to say. And actually, in the last 12 months, a bunch of these platform companies have gotten listed, which were probably also trading on the capital market side. So is that something that is, to your mind, exciting global investors as well?
No, absolutely. As an equity capital market professional, this is something which we are proud about. If you go back, let's say a couple of years, what were the chances that such companies, the new age tech companies, will go public in India? There was a widespread discussion around it, and finally, there was discussion about which venue, which region, in what manner to list. Will it be a stock? Will it be a DBR? Will it be a combination? I think all those discussions are now coming to rest with what we are seeing in the market. So as a country, it's something we are taking the market to the next level. We are evolving. Gone are the days where we used to have this notion that loss-making companies cannot list in India. I think that perspective about having a single lens on profits has changed. Investors have come to terms that this is a new way of dealing with new age companies. There cannot be a single metric. Yes, a company may not be profit making today, but that does not mean it will not make profits tomorrow. And share market is all about the future, right? It's all about the promise. And that's where I think we as a country have now evolved to understand these companies. So you spoke about gaming companies. As Nomura, we have been part of gaming IPO. There are other new age companies which are coming to the market. And we have realized that both the foreign investors and the domestic investors have now come to realize how to look at these companies, what are the different metrics to look at these companies, and not just profits as a measure. This is also important because as we have seen, the pandemic has been a big influencer for these companies. If you look at our own life as a consumer, if you look at our smartphones, right, we use these apps, we use these products daily. So we have the touch and feel already. So these are not pie in the sky companies where we do not know exactly how they operate. These are companies which we use. These are companies which we ourselves are consumers of. So to see this kind of consumer activity actually get reflected in the stock exchange is a positive sign itself, because then it formalizes this activity which we are doing on the business side into the capital market activity. There is real market cap now allocated to these, tons of deliveries are getting done, which so far were not part of the formal sort of calculations, now become part of a formal market cap. So which is a positive sign, which is a sign of a growing economy. And also the fact that they are getting listed in India is also a matter of pride, because at the end of the day, if we have to be showing that we are an evolved market, we are able to understand these companies, we are able to value these companies. I think from that perspective, again, the initial public offer can also stand for the Indian public offer, right? That this is happening in India. So from that perspective, it's a very positive sign.
Mangesh, is there a change in the way some of these IPOs, since we're talking about tech, let me finish that part and then I'll move on to some of the others. At the way the valuations and the pricing of the IPOs are happening currently versus what they may have happened, because there was some conversation about how bankers have gone into the informal book building method to reach pricing versus something else that was done in the past. Can you tell us if there is a difference, or is it continuing to be what it used to be?
Sure. No, definitely the way I will look at it is we have experience. So we have done a couple of IPOs as Nomura where we had to go through this experience firsthand, and we realize how investors are looking at it. Now, there are a couple of ways of going about it. Obviously, there is no formula around it. But it's not that these companies are particular only to India. There are global comparables. So, for example, you mentioned gaming. There are global gaming companies listed, so you can have a peer benchmark there. We also did an ad tech company IPO. We also did some other, like for example, we did the mutual fund registrar IPO. So it's not that they are the only ones. There are comparables which are listed globally, so you can use them as benchmarks. The second reason is the experience of investors in other countries. So, for example, some of the developed economies like Hong Kong and US, they have seen similar companies get listed there. So, investors who have participated in that value unlocking in those geographies are actually giving the benefit to the Indian companies because they have seen these models before. And the domestic investors, for example, the mutual funds and the insurance companies, they also are getting their act together to value these companies and on par with the global comparables. So I think that education has happened over the last couple of years. Again, I will say the big trigger point has been the pandemic. People have realized how deeply these companies are engraved in our lifestyles. So, for example, gaming companies, for example, travel companies, for example, food delivery companies, e-commerce companies. I mean, you look at you and me, right? We all order food, we order tickets, we order, apparel, and we cannot deny the fact that these are valuable companies and these got to be valued at the right price.
So how is this valuation happening? Is this happening via pure global benchmark comparisons, or is it
Yes.
some other fashion?
So there are a couple of situations again. They happen with peers. They happen with the last round at which investors have come in. That's also a good benchmark. And the third is obviously the feedback which we get from roadshows, right? Because that's where the heart of the matter is. That if, let's say, 20 investors have raised their hand to put in money in a company at X value, I think that is the best feedback you can get, no matter what the Excel sheet says.
Okay. Mangesh, considering that, and I'm just rattling out names, some of these might happen, some of these might not, but considering that post Zomato, Paytm, maybe Flipkart, at some point of time, NSE, though not in the same vein, but out there, but Nykaa, Deliveroo, etc., etc. A lot of these platform-enabled app companies that you were referring to get listed. Is it imperative for the Zomato IPO to be a success for some of the others to actually find investor appetite? Or do you reckon that the global investor appetite for Indian tech paper might anyways be strong, considering how this is the first of the many to come, and also what's parallelly what's happening in China, wherein, I mean, there is some concern, at least on the part of some global investors that I speak to, about what's happening in that region?
No, I think very clearly, I don't think any one company's IPO success or otherwise can impact the Indian story so dramatically.
Okay.
It clearly is a wave. It's not a blip. So I don't think any one company can alter the outlook so quickly. And look, we already have had some tech listings already. I mean, Nomura has been a part of them, and they have done phenomenally well. So we clearly think that there is a bigger game at play. Both foreign as well as domestic investors have interest, have appetite for the Indian digitization story, the Atmanirbhar Bharat story. I think that's going to play out no matter what one situation, the outcome for one situation is. So we're extremely confident that you will see a good stream of these tech-enabled IPOs in the near future.
What about your some of the key clients or key global clients who subscribe or potential subscribers to this IPO? The usual conversation, Mangesh, used to be that if there is a lot of primary market paper, it will suck out liquidity from the secondary markets.
Sure.
Would this time be different because one of the nature of the IPOs, and two, because of the liquidity sloshing around, that it will not be a factor of either or? It could be a factor of, while secondary markets continue doing what they are doing, primary markets might still get robust subscription.
Yes, I do not think liquidity is going to be an issue. If you remember in 2017, we had larger size issuances. Like, for example, we had at least 5 or 6 billion-ish IPOs in 2017. We haven't seen, we were part of another large IPO recently. And we see that in 2021, liquidity is not going to be a constraint. If you look at, let's say 2 weeks back, we had 4 IPOs in a week on a trot. Even last week, we had 2 IPOs. We have another few IPOs lined up on the street. So I don't think there is going to be a liquidity issue. If you look at the secondary market as well, the average daily traded volumes have gone up significantly since the pandemic. I think that's also a healthy sign. And the third reason why we don't think liquidity is an issue is because of the flow, money flow we are seeing already, right? So both from the foreign investors as well as mutual funds and insurance companies, if you see the money flow, it's quite robust, and that gives us the support that the engine will keep rolling as long as quality paper is coming to the market.
Mangesh, I understand. I don't want you to comment on individual stock IPOs. I don't want you to comment on specific names, but I'm making a general statement out here. You may or may not have been a part of some of these, but still, speaking from an industry perspective, a lot of IPO paper that has come out in the recent past is not necessarily the promoter or not necessarily the company raising money for either capex or other plans. Yes, they use a part of it, but in a lot of cases, it's a small fraction going to the company majority, it's either the private equity investor being given an exit, and in certain cases, the promoter making a large sale as well. Now, this is a bit of a deviation from all the years of IPOs that I have seen in the last 15 years, right?
Yeah.
How would you characterize this? Is this the nature of the paper that is coming in? And is this a concern, therefore, as well? Because largely people should be subscribing, ideally, in a utopian world, people should be subscribing to IPOs wherein the company is raising money for further expansion, right? Not necessarily to give an exit.
Correct. Yeah. No, I think that's also an evolution of our Indian markets. Earlier, if you look at the sponsor or the private equity action, there were concerns that if we invest in a company, how will we get an exit? Right? That used to be one of the concerns for these investments. But now our markets have shown that there is an exit opportunity, or there's an exit option for these private equity venture capital investors to do an IPO or to do a situation or transaction in India itself. I think so. That's a good takeaway. We do not have that hindrance anymore. Point two, coming to the primary versus secondary, is yes. If you look at capex heavy industries, I don't think they have come to the markets yet. But that's also a function of what we are seeing in the broader environment, right? We do not see a large industry capacity being enhanced, which will need a primary market activity. So I think with time that will also happen once maybe the lockdowns are lifted, once more activity and more sort of a movement improves. I think that should also happen. But again, the fact that the capital market activity is so vibrant will definitely give confidence to the capex heavy industries also. So also giving a positive signal to those industries that look, if you're looking to raise money, the markets are very, very conducive right now. So some of the cement companies, some of the steel companies, oil and gas sector, which has hitherto stayed away, can surely look at coming to the markets given the conducive environment we are in right now.
Mangesh, what can spoil the party? I mean, the obvious answer would be if the markets do a nosedive for whatever reason, known or unknown. But aside of that, anything else?
I think, as I mentioned in the beginning, the markets are sentiment driven. If there is, especially in the IPO market, if there are instances where IPOs underperform or they do not list above the IPO price, that could be a worry. I think one or two instances will not sway the sentiment so much because everybody realizes it can't be a one-way party all the time. And the investors are also discerning. Let's be fair. It's not that every paper is getting equal sort of attention. There is cherry picking happening. So I think that's maybe one sort of key point to sort of pay attention to. And the second, obviously, is the coming back of the pandemic. If the third wave comes back surprisingly fast, surprisingly strong, I think that could put a spanner in the way. But again, the markets have shown their resilience. We have seen two waves already, so the bounce back will also be that much more stronger. But yes, I think as an ECM professional, I'm very clear that if you see everything is going right, there is something to be worried, surely.
Yeah. But the responses thus far, Mangesh, for some of the paper is pretty large. I mean, one would have had the fear when some of the rules were changed last year was that could it hamper the HNI investing, etc. For now, I mean, the responses to the recent 2-3 IPOs that GR and Science and all, that hasn't diminished the investor appetite at all.
No, I think that again is evolution of the country. If you see post the pandemic, and again, one of the beneficiaries of pandemic has been movement of savings from non-equity to equity. If you look at the number of demat accounts, if you look at the number of new investors who have logged into NSDL and CDSL, if you look at the online apps which have made trading so easy, and that's reflected in the share of individual trading on the NSE and BSE, it clearly shows that there is a big pool of savings, investor money, new set of investor money which has come in, apart from the institutional and the HNI investors. So that's positive. Second is the retail investor has been driving some of the momentum in the primary market. Again, that's a reflection of the avenues available for retail investors. If in a way, the other avenues are not so attractive right now. So if you look at fixed deposits, bank savings, real estate, there is not much left. And equity, on the other hand, has shown phenomenal returns. So again, I would look at it very, very positively. That
but Mangesh, that point having taken, I mean, but the quantum of subscription was or something. It's not like there are other specialty chemical companies not available, right? For that matter, or not available. Which is why I was thinking that the response was pretty staggering despite the new rules.
No, I think investors have now become savvy. They realize that if you look at the subscription levels, it's not that all IPOs receive the same kind of subscription. Yes, some are hidden gems, some are sort of over the top as far as subscription is concerned. But investors have become very savvy, and we actually respect that, because that just shows that our market is evolving from the investors' perspective as well, especially the retail investors. Right. So I think that's a positive sign, and I think what would bode well is if investors keep having a good experience of positive returns on their investments, they will keep coming back, and that's also, as a professional, I look forward to bigger and better numbers. Great.
Okay, Mangesh, we leave it at that. Thanks so much for taking the time out to us about the IPO rush, if you will, in India currently. Much appreciate your time.
Thank you, Neeraj. It was a pleasure. Thank you very much for having me, and look forward to chatting sometime later soon. Thank you.
Sure. Thanks, Mangesh. And viewers, thanks for tuning into this edition of The Talking Point.